Hi, I'm Lindsey with Global Markets Intelligence at S&P Capital IQ. I'll be covering the market outlook for the U.S. and Europe. Earnings estimates continue to slide lower despite the start of earnings season last week. Over the course of 2 weeks, S&P 500 growth expectations fell 80 basis points to 4.1%. Despite solid earnings reports for companies like Alcoa, CSX, Lennar, Southwest Airlines, and Intel, weak earnings results from the financial sector and still falling oil prices are pressuring overall expectations for the index. If the energy impact is excluded, EPS growth would be 7.4%, which is more in line with the type of growth that the index typically posts in the fourth quarter reporting period. One trend that has emerged in the last few weeks has been the banks reporting disappointing results. Misses have come on both the top and bottom lines for companies like JP Morgan, Citigroup, Bank of America, M&T Bank, and Regions Financial, to name a few. Earnings across the banking sector have been characterized by lower mortgage banking revenue, very weak performance in fixed income trading, and declining net interest margins. The positive qualities were solid loan growth, investment banking revenue, equities trading performance, and lower expenses. Financial sector earnings currently stand at $5.23 a share, representing 3.8% growth. That's about half of the 6.4% growth that was anticipated for the group before earnings were released. Looking at the overall breakdown of sector performance, healthcare is now the only sector expected to post double-digit growth. Telecommunications estimates have been reduced, and the group has lost its second-place position for growth to the technology sector. Tech made strides to pass not only telecom but also the industrial sector to earn the second-place spot in a short 2-week span. Turning to Europe, the S&P Euro 350 has moved higher in anticipation of the recently announced stimulus plan from the ECB. On Thursday, plans to repurchase €60 billion in government bonds were announced. That was better than the market had expected. In the face of that, earnings growth for the region has remained stable over the last 2 weeks, with 2014 growth pegged at 7.4%. Technology and financials continue to lead growth this year, while telecommunications, utilities, and consumer staples lag. Until next time, I'm Lindsey with S&P Capital IQ.